Hello and welcome to the Miko Bits Show, and I'm your host, Miko Bits, and today I'm very excited to have Pankaj Balani, who is the CEO of the Delta Exchange, which is a derivatives exchange, and it's a very exciting product. And I think what we're going to learn is some of the depths of the financial derivatives market. We have had a number of really interesting projects on to talk about things like derivatives. Obviously, things like the Opium Protocol. I'm excited to have Vega Protocol. We did have UMA and we had Synthetics, Kane Warwick. So we've certainly had a number of people on the derivatives side speaking to us on our show. But the thing that I think is going to be evident is that the derivatives space is undersized in Bitcoin. And I think that we're going to learn in the normal financial markets that the derivatives market absolutely is colossal in terms of the size. So, it's a very, very important space. And I think it's a very exciting one. And it's exciting for me personally to have a very significant expert on the show. So before we jump in, this is an opinion and entertainment show. So this is not financial advice. So please seek a duly licensed professional for investment advice. So without further ado, would love to introduce Pankaj. So hi, welcome.
Hi, Miko. Thanks for having me on the show. Really excited to be here and really looking forward to the next hour and a half of the conversation. You know,
Wonderful. So I think first things first, it would be really great to kind of get to know you a little bit more. So, Pankaj, like, how did you get excited about, both derivatives and also like blockchain technology? So how did that happen for you?
so so we've been doing Delta for 2 years now, right? So prior to Delta, I've spent good chunk of my career doing derivatives. About 6 to 8 years doing derivatives trading or involved in derivatives market in some form or another. And I come from a physics background, so I'm an IIT graduate. I passed out of IIT, did my major in physics.
Physics.
And yeah, so from physics to derivatives, it was, basically I did my bachelor's was a lot focused on nanosciences and mathematical physics and computational physics. And from there on, I found a very good fit in the investment banking industry, which I got picked by UBS in Hong Kong and I got picked on the derivatives side. So essentially, derivatives also involve a lot of mathematics. So it was quite fun. It was quite natural. It was quite intuitive, exciting. And it was like finding, being able to solve real world problems by what you've learned over a period of time. So it was really exciting for me as well. And yeah, I just fell in love with it. I just fell in love with the idea of designing different kind of derivative products, understanding derivative markets. And in crypto we often say down the rabbit hole. So it's the same thing with me on the derivative side. When I started to learn about these markets, it was really exciting, and it was one market after another. I was part of UBS, and I was very lucky to be part of one of the largest derivatives desks globally. So we were trading India, Hong Kong, China, Korea, Singapore, Taiwan, and it was just so exciting to see, how different kind of products trade in different kind of markets, different investor base. How do they access different markets? That was really exciting for me. Then I wanted to get more formal education of finance. I decided that look, this is a space where I want to be in. So I did my MBA, and then after that, I again worked on the derivatives side. So yeah, I've done derivatives for good 6 to 8 years in my life, and working with a hedge fund, working with an investment bank, and I've pretty much done everything under the sun when it comes to listed derivatives or over-the-counter derivatives. So yeah, a lot of spent a lot of time and energy there. So that's always been a passion, and it excites me today the same way it excited me on day one. And when I started in the crypto space, when we started to look at crypto markets back in 2017 end, it was very clear that derivative markets don't exist in cryptocurrencies. So it was like a hunger to go and build these markets. And like let me give you some numbers.
Yes.
Um, Globally, the market cap of all equities outstanding is about $75 trillion, right? The derivatives on top of equities is about 500 to 600 trillion dollars. These numbers are from Bank of International Settlements data of 2018, 2019. So you see a factor of 8 to 9 times, right? That's
Yep.
how big
Yep.
derivatives markets are. If you see daily FX, you have about 1.2 trillion of daily spot FX trading, trillion.
Yeah. Financial
Daily,
exchange. Yes.
yeah, FX as in foreign
Foreign
exchange, right?
exchange. Yeah.
And daily derivatives volume on FX is about 3 times that, so $4.5 trillion. So typically, a derivatives market will be 5 to 8 times the size of the underlying spot market, right? Now, in cryptos, when we looked at this market way back in 2017 December, we saw that daily crypto volume was about 10 to 15 billion dollars, but daily derivatives volume was barely a billion. So something that should be 5 times was actually 1/10. And even in that
Yes.
1/10, it was dominated primarily by Bitcoin perpetual swap. There was no contribution from options.
Yep.
There was no contribution from Ethereum futures. There was no contribution from Ripple. Even today, there is hardly, derivatives hardly expand beyond Bitcoin futures and options. Even contribution of number two coin on derivatives is not 4 times the underlying spot volume or 5 times. And so if you think derivatives have exploded in last 2 years, yes, they have, but the bigger part of the explosion is yet to come.
Yeah.
And it's going to be like 2021, in my opinion, is going to be the year of options in crypto. And uh, options are a huge part of the derivatives market and highly dominated by retail on the listed product side. So if you see Robinhood, if you see data in India, which is one of the largest derivative markets globally, I'll talk more about this in detail. But yeah,
Yeah. Wonderful.
crypto options are not represented at all.
Yeah.
There's nothing, we have not even scratched the surface there. There's a long way to go for us. And there's a huge, huge, huge opportunity. And these are the kind of things that excite us, going and laying out that infrastructure, going and laying out that ecosystem, setting the norms. It's like, it's like an engineer's dream, right? There's vast pieces of land, and we are building the bridges and the roads. So,
Yeah.
so yeah.
So before I forget, actually, one of the things that I'm ethically bound to do as well is disclose that my venture fund, Gumi Cryptos Capital, is in substantially late stage discussions with
Yeah.
Pankaj about investment. So I just want to disclose that just to put context around this, but the people who know me well know that that doesn't really influence my excitements. And, I'm very excited to have Pankaj. I think for me, it's part and parcel of, you could read it a couple ways, right? You could read it as shilling, which is the negative view. But the other way you could read it is that I'm very serious about what he's doing and about him, And so for me, I think the way I reason about this, for the audience's sake, is that it's exciting for the space to have very sort of world-class talent coming in from traditional finance, and obviously Pankaj with his background at UBS, and of course with this incredibly intense mathematical and academic educational background, obviously in physics and as well in mathematics. These are the kinds of people I think that should help to carry this space forward. Now, I think one of the things that's been a fairly recent development is that the aggregate value of all of the crypto space is definitely in the around 1 trillion range, as of even just yesterday. So, I think that's a very interesting. And obviously, if you look at 8 times of that in the derivative space, you do see a total addressable market at the moment, presently, of like something like 8 trillion, which, I think starts to get gold-like. I mean, it starts to get very it's meaningful. So, I guess what I would love to have you help the audience with is sort of reason about kind of what's the purpose of these instruments? Like not just from the individual trader perspective, right? Because the individual trader perspective is very, very limited, right? Which is the purpose is make money, right? So that's not that interesting. But what's the function it's performing for the economy?
Absolutely. Unless anything has a real reason in the economy, there is, speculation alone is not a good reason to have something.
Right.
Now, speculation is always a, activity on back of something, right? So it's a way to do something, but standalone, that's not a very, you know, very strong reason to be
It's
part
not
of something.
sustainable.
It's not sustainable, absolutely. Now, derivatives actually are really a hedging instrument, right? They are a hedging market. So essentially, they help people reduce their and manage their risk. Now, let's start by a simple example. Let's say I am a traditional bank and I really love this smart contract, thing on Ethereum. Now, what I want to do is do business with someone in I'm a bank in say UK or some other country, and I want to do business with some other person in some country in India or in China, and we decide to lock our obligations in a smart contract. That look, I am going to pay you $1 million for delivering me some software or something, and I'm going to put $1 million of Ethereum in a smart contract today, and despite the fact that you're not able to see me, you can trust me because or meet me, you can still trust me because the money is locked in Ethereum contract. If you
Yep.
don't deliver, my money comes back to me.
Yep.
And if I don't deliver, then you don't have to chase me for payments, right?
Yes.
Chasing for payments is a very big use case in the economy. Like
Oh,
people deliver
it's
services
huge.
and they chase for payments.
Yes.
And talk to our freelancer friends, they will bite on this idea.
Oh my
Chasing for
God. It's
payments.
it's
Yeah.
so big.
Yes, and look at big companies, right? Big retailers like Unilever and Amazons and others. They have made businesses on keeping the working capital negative. And a big part of keeping your working capital negative is to pay your suppliers later and get your money first.
Yes.
So essentially, sophisticated way of saying make people chase for payments, right? So suppliers don't want to do that. So, okay, let's come back to that example. I have logged $1 million worth of Ethereum today, and the delivery is supposed to be in 3 months' time. Now, this is a big price risk for me and for the counterparty. If the Ethereum drops 50% in value or say 25% in value, then the counterparty or the receiver of these funds, their value has eroded by 25%, right? So if the value goes up by 50%, then I should have, I don't want to be on the other end of this bargain either.
Yeah.
So I want to do, if I want to get rid of my obligations today instead of waiting for the future, right? So I need to hedge myself. This is the same problem that people have when they are hedging FX. So even if we were doing this business in US dollars, we would look to hedge our obligations, right?
Yeah.
So if you want to lock the price of Ethereum, what you do is you buy Ethereum today, you short Ethereum futures, and then you are totally immune to the price risk on Ethereum. So as a bank in UK, I want to do business with a software provider in India. I buy $1 million of Ethereum, put it in a smart contract, short my futures on Delta Exchange or some other good quality derivatives exchange, and I have no price risk to Ethereum. My counterparty does the same if they want to manage the risk, and so on and so forth. So it's more risky on my counterparty because I am locking my Ethereum anyways. My only constraint is that if the counterparty doesn't deliver and my Ethereum comes back to me, I don't want those Ethereum to be worth less than when we started, right? So when I locked in 1 million of Ethereum and they were in a smart contract, if the smart contract doesn't get delivered and my Ethereum come back to me, if they are 25% lower in value, I lost $250,000.
Yeah.
But I made a gain on my futures position. So I'm not too worried about it. So essentially, the real value of derivatives is in helping companies and businesses protect themselves against price risk. That's a simple kind of a
That's
derivative
beautiful.
futures contract.
Yeah.
Another contract is an options contract, which helps you prevent against the volatility, against the ups and the downs in the market, right? So let's take an example. Let's say I am a fund manager. I manage money professionally. Now you give me $1 million to manage my risk, and I buy some stocks, from that $1 million. I cannot anticipate an event like Corona crisis, right, where markets can fall 40% overnight
Yeah.
or 40% in a week. So what I do is, but I know that my investor, you will not be really happy if I tell you that, look, you gave me money last week, now it's down by 40% because there is something.
Yeah.
So as a smart money manager, I want to prevent against any kind of external events. So I go and buy an insurance on the broader market, a protection. I pay some premium and I buy a put option, and I buy an insurance that if the entire market falls or some external event happens that I cannot anticipate, my portfolio is protected. So I buy a put option. This is the same thing that we do when we buy life insurance on ourselves, right?
Yeah.
That if things go terribly wrong, my future earnings are eroded because I'm not there anymore, then my life insurance kicks in and my family is protected. Or if I am a, I can insure my business or I can insure something else. So people want to buy insurance on portfolio as well, on broader markets. So to prevent against these kind of scenarios, you use something called an option. And one of the examples that I've taken here is that of a put option. So essentially, these products are not new. They have been in business for hundreds, and I think the first put option was done somewhere in 14,
Can
1500
you
or something.
unpack for my audience, like puts, like puts and calls, and can you give us a little clarity on that?
Sure. So put option is something that gives you right to sell something at a fixed price, but not an obligation. So let's
Nice.
say you have the right to sell Bitcoin at 30,000 today, but you don't have the obligation. This means you have an option,
That's
right?
great.
And that's why the name option.
Yep.
So, so why do we call it a put? Because you can, when business used to happen earlier, it used to happen across the table. So you can put something on the table, and
Nice.
the counterparty has to accept the price,
Nice.
right? So I
Nice.
can put my Bitcoin on the table for 30,000, and even if the price is 10,000 in the market, you will have to accept it at 30,000 because you sold me the put,
Yeah.
right?
Yeah.
Similarly, the call is opposite. I can buy Bitcoin at say 30,000. So I can call Bitcoin towards me at 30,000
Nice.
because I have the right, but not the obligation to do so. So if the price in market is 35, I can call them at 30, and that's why I make an immediate profit. If the price in market is 25, well, I will not want to call them at 30 because I can go and buy them in the market at 25, right? So call option is exercised only when the price is more than the strike price. And strike is the number that, you basically the price at which you exercise the call, or the price at which you exercise your put, or buy the underlying or sell the underlying. So essentially call is a right to buy something at a fixed price. Put is right to sell something at a fixed price. And when you add them put together, it's like a forward. So right to buy something at a fixed price, and if I have sold a put, so long call and shorter put is nothing but a future. So that's why the mathematicians, those who like mathematics will get quite excited about it. But yeah,
Yeah. So I love this. I want to tap back into your physics background because I think that there's two things that I think are fundamentally exciting about what you're describing and the function of derivatives in the broader global economy, right? Which is that what happens when people take actions is two things. One of the things that happens when someone takes an action is that it creates information, right? So that in some ways is the purpose of action. But I would say that the other thing that happens is that anyone taking action immediately becomes imbalanced, right? Because
yeah,
the right. So as soon as you take an action, you become imbalanced, right? And the thing that's so interesting is this is kind of an inherent imperfection in the world, right? So the thing that's so interesting about these inherent imperfections, I'm going to describe a few inherent imperfections, right? One of the inherent imperfections is that unlike Einstein said, God apparently does play dice with the universe, right? In the sense that when we go down to quantum mechanics and we study things like Erwin Schrodinger, we study these kinds of understandings, we
yeah,
understand that randomness may be part of the deep intrinsic fabric, right? And so that exposes everyone to black swan events. It exposes everyone to these kinds of like very chaotic fundaments, right? So that I think that's the microscopic and the quantum, right? And I
yeah.
think that it's fascinating what you're describing because you're really describing using finance and mathematics to take an imperfect world with respect to randomness and to kind of make it a more perfect world financially.
Absolutely. And one of the things that I've always thought, like the way I've thought of things is inherently these things should be quite simple, right? Because the start of these things was with merchants who were going from places to places. their desire was not to solve complex mathematical problems or solve equations of physics. It's basically simple life. They were looking to, sitting across the table and putting something and calling something,
Yeah.
and being able to buy something at a certain price. That was enough. And later on, these things have evolved with interdisciplinary, sciences, like we brought in physics and technology and mathematics and computation to it to do it faster. But the nature of these things remains very simple. So a lot of people don't like derivatives because people think that because you can short, one of the early criticisms of derivatives in cryptos was that because you can short, it will lead to prices going down. It will lead to prices going down. Uh, the reality is we all use derivatives. Like everyone, most adults over 30 will have a life insurance. So if you hit derivatives, the first thing you want to do is probably cancel that life insurance premium. And if you feel that you should not do that, then you actually like derivatives. So they are useful.
I like
Right.
that. And it's exactly as you describe, right? Which is that what you're doing with life insurance is you're looking at things like these random microscopic stochastic events, right? That you see in something like Erwin Schrodinger's research, right? And in a sense, you're the cat, right? You're the cat. So like if, if you die from the experiment, then you need to, the goal of something like a life insurance is to transform an imperfect human, right, into a utility, into a reliable utility for the future generation, right? To be utterly reliable, right, as an infrastructure, right? So you become a financial
Absolutely.
infrastructure for your children, right? So I think life insurance and your spouse or family or parents, like whoever's left, your heirs.
Absolutely. And we do this at every step in our life, right? We don't realize. So we do this when we buy car insurance. We do this even when we buy, something in bulk. We are protecting against price increase, knowingly or unknowingly. We are protecting against increment in price.
Yeah,
So
I like the mindset. We actually had the Opium Protocol founder on the show, and he actually announced for the first time on my show, just pure insurance products, on opium. So I thought
yeah.
that definitely makes a lot of sense. I would say that there's a second property of physics that relates more to classical physics, and I would say
Mhm.
that you can model this in reasoning about something like a perpetual motion machine,
Mhm.
right? So the
Yeah.
question becomes like, why can't you build a perpetual motion machine? Right. So I was asking someone this, and they came up with several intrinsic properties of the universe. Right. The
Mhm.
several intrinsic properties are: one is there's not an infinitely prolonged reliable source of energy. Right.
Absolutely.
And the question
There
becomes,
has to be, yeah.
why do you need that? Why do you need the energy, right? And the second answer becomes because there's friction, right? And why is there friction? There's friction because there's always minute or microscopic imperfections in any manifest real human endeavor, right? So what we're talking about again is the imperfection, the intrinsic inherent imperfection of human endeavor, right? And then the third property that arises, which of course beyond friction, right? So it's energy and then friction, and then the third property, of course, is entropic effects, right? So if there is friction, eventually the machine will grind itself to death and it will fall apart,
Yeah.
right? And then so
Follow.
so I guess what I'm really trying to assert is I'm trying to assert that the world and action within the world has these inherent imperfections, right? And the thing that's so interesting about the derivatives market that you're describing is you're describing not only do derivatives protect you from like randomness, but they can also protect you from other inherent imperfections like the lack of an infinitely prolonged energy source, the existence of friction, the existence of entropy, all of these kind of fundamental physical properties of the universe like result in the imperfection of human activity, right? And what you're saying is that let create a mathematical models that enable people to financialize the reliability of these systems.
Yes. And for example, today market is going up, right? Now
Yeah.
there's anybody who's stayed in markets for long or even for short, smaller days knows that markets go up and markets come down. So there will be a time when markets will come down,
Yeah.
sometimes more than others, sometimes very bad. And for those days, you have to protect yourself. So we have heard a lot of firms coming out and buying bitcoins and billions of dollars, right? Uh, Now, if these guys, they will become the natural consumers for put options in the market.
Yes.
because they will need to protect themselves against any kind of, scenarios that you haven't thought of,
Yeah.
or any kind of volatility, because it's not easy to sleep through a night when you have $100 million of losses because of a 10% markdown,
Yeah.
right? I mean, probably at 10,000 people don't like it, but yeah, 100 million is a huge number, and then your phone will not stop ringing. So you will need to reduce the volatility of your portfolio, particularly when you're managing external capital, particularly when you're managing shareholders' capital. So as markets become big, we all like institutional investors to come in. We all like passive money coming in. But that money has to be very responsible. So in finance, you define Sharpe ratios, right?
Yeah.
High return, low volatility. So how do you reduce volatility of your portfolio if you're investing in an asset class that you want to give? The reason to invest in crypto for a lot of these big fund managers is because of the extreme return, but at the same time you have to protect the downside. So you become natural consumer of these kind of products. So now you would think that, can you really grow the crypto market in absence of a derivatives market? Like, so what started as a, devil that,
Yeah.
okay, this will help people short, is actually not a bane but a boon. Because it helps you get more people, it helps you get more sophisticated investors, it helps you get more money in the system, and it
Yeah.
helps you grow the ecosystem. And honestly, like if the last cycle, those who were in the market back then, and most of the people would remember, we corrected from 20,000 to 3,000, right? And we corrected very sharply. So but we also went up really sharp. We went from 12 to 13 overnight. We went from 13 to 17 in a jiffy, and then 17 to 20, and then a sharp collapse intraday to
Yep.
11,000.
Yep.
So when you have derivatives, you get froth cleared out at every time. You have shorting activity at 12,000, at 13,000, at 17,000, and at 20,000. So when you fall, your pain is a lot less, and pain is gradual. So it's like skimming the top. Derivatives help you skim the top. They let you reduce the froth, and so in the long term, they reduce the pain, or they reduce the long-term volatility of an asset class.
Yeah.
And like over the next few bull cycles that we'll see in crypto markets, we will definitely see falls which are not as big as earlier. So the the bull market prior to the latest one corrected 95%. We will not see that again because of derivatives.
Yeah.
uh, in that regard, derivatives help reduce the long term volatility quite a bit.
That's very exciting, to be honest. And it's a beautiful utility, right? Because the thing that we might imagine is we might imagine the emergence of a stability of a cryptographic asset like a Bitcoin, right? And that an emergent stability, with some kind of like concomitant increase in the net aggregate value would be, I think, beneficial to the whole all stakeholders, right? So I think that's a fascinating thing, right? Because the thing that people have been arguing is they've been arguing that one of the decrements of the effectiveness of Bitcoin as a store of value is volatility, right? So the idea that we can potentially mathematically reduce this through financial instruments is an exciting prospect. And I think the thing that's fascinating about what you're describing is that not only is it sort of like exciting, fascinating prospect, but it's also a precondition for the invitation of large asset managers, right? Because a very large asset manager is professional, right? They're professional. And so like they can't just, buy Bitcoin and stick it on their hardware wallet and just hodl, right? Like that's not a professional
that
investor.
that even Warren, like you can only do that with your prop capital. If you are managing clients capital, you cannot do that. You have to explain how money has moved and what kind of drawdown you have suffered, and you have to do that every 3 months. So you want professional money in the ecosystem. It's a precondition to have high quality derivative markets, not only just derivatives, but high quality, good quality liquid derivatives market. And it's an ecosystem, right? So the beautiful thing about ecosystem is every player has their own role to play. So because somebody is shorting, because they're hedging, it makes it attractive for somebody else to buy
Yeah,
in the future
of
versus
course.
buying in the spot, and that is where the speculators come in. So essentially speculators or hedgers will drive the price either away from the spot, away from the fair value. And arbitrageurs will then come in and stitch the pricing together.
Yeah,
Just as we saw in Uniswap,
for
right?
sure.
Arbitrageurs play such an important role in making the market sane. So,
Yeah, I
so
would
no,
say in my metaphor, in looking at this as friction, right? One way to look at people doing roles like that is almost like lubrication, right? In the sense that when you add liquidity and you add like lots of actors, then you
yeah,
really end up with a very almost a simulation of a reduced friction, right? So
absolutely.
that's great.
So every market will have its different kind of actors, and they will have different roles to play, and together it turns out to be a market which is good. And so speculators have a role, arbitrageurs have a role, and hedgers have an inherent demand, right? So we cannot say that speculators are less important than others, because when hedgers are selling, speculators are buying, right? Similarly, when there's an imperfection in the pricing, arbitrageurs are coming in and making sure that the pricing is not imperfect, which reduces the cost for a hedger or a speculator, because the pricing goes more towards perfection. So I think markets have different participants, different roles, and you need to have a very high quality derivatives market to grow. And different products, not just one kind of a derivative product. Like we discussed, options have a different role to play. Futures have a different role to play. Convertibles have a different role to play. We haven't even started in crypto on any kind of convertible obligations. There's no need as of now. But yeah, at some point maybe. Then interest rate swaps. So we have done interest rate swaps on Delta, right? So there's so much borrowing that is happening on Aave, on
Yep.
Compound,
Yep.
and all the interest rate is variable. Now,
Yeah.
imagine having borrowed 100 million of SNX and waking up to a interest rate going from 8% to 40%. Now that again in just one day can swing the interest liability by quite a bit. So what you really want to do is buy some kind of insurance on your interest payment. That, look, I don't want this variability in my insurance payment. Give me a fixed interest rate. So there's a product that helps you swap your variable interest rate against a fixed interest rate. So somebody says, look, you borrow from Aave 100 million, whatever variable interest you have to pay there, I will compensate you for that. But in return, you pay me a fixed interest rate of, say, 8% per annum or 10% per annum or so on. And
Yeah.
these kind of products can further be traded on exchanges like Delta. So we have done an interest rate implementation on interest rate swap on Bitcoin and on DAI. In DAI, we use DAI savings rate as the base variable rate. And in Bitcoin, we use the funding rate on perpetual swap as the rate that is the variable rate for borrowing Bitcoin. So again, that is a product I am super bullish on. There's a very clear need, and I believe it's only a matter of time when all these big borrowing, and particularly in bull markets, it will become super important, because when liability will start to explode, and when with the demand, and interest payments will become quite substantial in dollar terms.
Well, I love I love what you're saying. I think to me, and I'm so glad I asked the question about like what is the economic function, right? Because it really does kind of become very clear your explanation. So I really appreciate that. And I think that to me the thing that's so interesting about this kind of form of financialization is that when you look at the primary sources of alphas and gains, within yield instruments like DeFi, right? What you really begin to understand is you begin to understand that there are primary and secondary sources of yield, right? And that, to me, primary sources include a couple of things. One of them is net new economic welfare, right? So it means, for example, if
Yeah.
you create something that is a utility that nobody's ever had before that they enjoy, for
Hmm.
example, like a Bitcoin, that's a utility and people, want to use it, right? So the actual usage is one, right? Speculation's a separate thing, right? But I'd say the thing that's, another area could be something like games or art, and I realize that's very small, but but you're at least creating something the world has never seen and is now enjoying, right? So that's a net new value. But I would say the majority of DeFi yield is actually risk, right? That's the
Yeah.
majority. So it means that there are people trading good monies, hard monies for soft, good monies for bad, and they're taking risks, right? So in some ways, I guess to paraphrase Warren Buffett, like if you don't know who the mark at the table is, then it's
Yes.
you. And if you don't know
You are the
where,
mark.
if you don't know where the yield is coming from, it's coming from you, right? Like,
Yes. So that's a very important idea. I mean, there was a day in crypto Twitter when everybody was talking about free yield and free yield. There's no free lunch. There's no free lunch. So somebody is paying for it.
yeah, yeah,
So if nobody's paying for it, then whatever tokens you are getting is not worth, right? So
yeah.
either it creates economic value for someone. If it is not creating economic value for anyone, then you are taking unnecessary risk for no return. So it's a net zero activity in that regard. I mean, somebody has to pay for the yield. Otherwise, there's a problem.
I think one of the things to me that's very exciting about the biodiversity of the cryptocurrency space, and obviously there's Bitcoin dominance and we love Bitcoin, of course, right? But like the
Yeah.
thing that I think is beautiful about what you're describing with this kind of mathematical cosmology surrounding all of these assets, right, is that when there's the potential for things like black swan events in the crypto space, right? So I'll give you an example. Like obviously, the United States regulators have gone after XRP, and that's been kind of almost black swan level, right? But the thing that's so interesting is to look at things like pairs. So if you look at lumens, stellar lumens, it's a very, very similar, even the same founder, Jeb McCaleb. So like,
Yeah.
it's so what you're seeing now is you're seeing lumens kind of booming and you're seeing Ripple kind of falling, right? And similarly, the thing that happens that's fascinating, for example, is people are talking about regulators not being that happy with USDT or Tether, right? But the thing that's so fascinating is there's also a USDC, right? That's backed by different players that has different regulatory properties, and maybe that, so the thing that's so fascinating is that the biodiversity creates certainly kind of like risk off potential for different kinds of black swan scenarios, So I think that there's metastability that's kind of coming out of this ecosystem.
Yeah, and that example about USDC and USDT is quite pertinent because we have this inherent assurity. People tend to assume more safety with USDC than USDT
Yeah.
because of regulation, and
Yeah.
that is true as well. But you have to understand that USDC is also does need has a lot of control over US government on USDC. There's a lot more control that US government or any other regulator can exert on USDC than on USDT.
Definitely.
Not only that, if USDC breaches any kind of compliance, then they have a lot more of a risk
Yes.
than USDT
Yes.
because everything is based out of US,
That's
and
right.
if something goes wrong, then there's a very high price to pay. So whatever is your strength can also become your weakness in that
Very.
regard, and somehow we tend to ignore that part. And XLM and XRP is again a great example because if you were not looking at any news and you were just trading these pairs,
Yes.
you are sitting on XLM. Your models will tell you buy XLM, sell XRP for longest time with
Yes.
no fundamental reason.
That's right.
I'm not saying that we should not look at fundamentals. It's just ironic how it played out, how the catch-up played out. I mean, nobody would have expected that convergence would come because of a certain event that happened with XRP, which will change the fortunes. And people had literally forgotten Stellar. Like it was number 6, market cap coin in 2017, and it kept falling without any activity for so long.
Yes.
And and the way tables turned in a matter of month. So it's up like 90% today, and XRP is down 60% in less than a month.
And from an events perspective, they did recently announce that the government of Ukraine is doing a CBDC, central bank digital currency project on top of Stellar Lumens blockchain. So I do believe that that's also evidence of a valid use case and of kind of utilization of the network. So there are fundamentals as well. So it's a as well as of course the regulatory black swan.
Regulatory black swan, yeah, and again, these are events you cannot really predict, and they can happen. Like, again, there's a saying, right? Markets can remain irrational for more than you can remain liquid for, right? So it's difficult to play these kind of things, but these things always happen. And the funny thing about them is they happen more often than you would suspect. So in markets, whatever scenarios you think can happen, more likely happens.
Yeah.
And
So I want to say you've been incredibly patient to educate me and the audience. So I'm super grateful. I'd love for you to talk a little bit. I think we're getting close to the top of the hour about Delta. So like please
sure.
please talk a little bit about kind of what's coming this year for Delta, because it's obviously a very exciting year.
Yes. So let me give you for the audience a little bit of a brief intro about Delta. We are a derivatives exchange. We do futures on Bitcoin. We do futures on a bunch of other altcoins, about 70 other altcoins. And when I say futures, I mean futures and perpetual swaps. So a very large, offering on Delta One products. Then we do options. We do options on Bitcoin, Ethereum. We also do options on BCH, XRP, LTC, Link, BNB. We are the only exchange to do options on a bunch of these altcoins. We do interest rate swaps. We do interest rate swaps, like I said earlier, on Bitcoin and DAI. We do calendar spreads, so people can trade one maturity Bitcoin future against another. We have also done exotic options on Bitcoin. So we are probably the first kind of exotic option on Bitcoin that we've done. We've done a knockout call option and a knockout put option, and the reason for that is they tend to be a lot cheaper. So it's inspired by a product which is very popular in Hong Kong markets, a callable bull bear option. So yeah, we've done a very we have a lot of products on the financial markets or financial instrument kind of side. We've done a lot of innovation, and we do about $70 million of volumes on a daily basis. So yeah, that's we've been in business for about 2 years. So yeah, that's a quick intro about Delta. And we are a team of ex finance and technology guys. So the entire founding team is myself, then my other co-founder who has a similar background as I do, working with the GIC and Citibank, and then a third co-founder who looks after our technology. He comes from an experience of building systems for scale. So systems, he was director of engineering at a very large video streaming company in India, Hotstar. And the funny thing about Hotstar is it's bigger than Netflix, Amazon Prime, and Hulu put together. So
Wow.
yeah, so they have about 600 million subscribers, 25 million concurrent users. I think the largest concurrency in the world.
Wow.
And and yeah, he was Saurabh was a director at director of engineering there, so head of machine learning. So yeah, we were very proud to have that kind of experience in the team, experience of building for tremendous scale, because our business is being able to handle a lot of scale. So
So
that I
so
think is
quick
going to be,
question, right? Which is
yeah,
I understand that there will be a Delta token. So I'd love for you to
yes,
say a few
yes.
words about that.
Yeah, so one of the things that, like what are we planning to do in 2021? 2021, a couple of highlights. First is going to be Delta token. So we just, we are just wrapping up our token sale round, and we've done a private round. And this is a token, essentially, it will help us build a lot more liquidity on the platform. The token is inspired by DeFi projects. So how DeFi projects have bootstrap liquidity on the platform, we have taken that inspiration and similarly created liquidity pools on Delta. So this is the first kind of experimentation with liquidity pools in the centralized derivative space. So essentially, we are saying that look, just as DeFi platforms have been able to bootstrap liquidity so much that they have become largest. For example, Curve Finance is the largest market for stablecoin exchange, right? It's bigger than Binance, Huobi, and other exchanges put together, I guess.
Yep.
So that's a great learning for us, like how DeFi projects have built so much liquidity in such a small time, and we have taken that inspiration and built that on the centralized derivative space, which should help us bring a lot of liquidity on Delta. And our aim is again to become one of the top three exchanges in derivatives out there. So this is our big bet on how we can increase our liquidity multifold in a very short span of time.
That's
And
wonderful.
our token Detto is the paramount unit there that helps us do this. So
When do you think that will arise?
So we are looking to do a token generation event very soon, probably by the end of January. And when we are launching pools, we are also launching strategies alongside with it. So we are launching um, strategies where people can put money and trade on. So if you like a momentum trading strategy on Bitcoin, but you don't want to write the code on your own, you can just come and put 5,000 USDT in the strategy, and strategy will trade Bitcoin on its own on Delta, and it will have its own target prices and stop losses and everything. So along with pools, we are also launching strategies, and those strategies will go live on platform about 20th of Jan or so. So about 10 days prior to the launch of liquidity pools. And we are really excited about these things. Again, we haven't seen any platform in crypto space giving these automated strategies to consumers where they don't have to worry about how to write a program, how to put stop losses, how to put target prices. All that is built in. You just have to contribute capital to it, and then the strategy does everything on its own, which is a very efficient way to participate in the momentum. And we will also encourage other people to come and build their strategies on Delta. So we will eventually become a marketplace between strategies and those who are looking to contribute capital to those strategies. So that part also will go live pretty soon. uh, and yeah, like I was saying, Detto is the entire focus of Detto is to help us increase liquidity on the platform. And one of the most important things for a exchange out there is to have more liquidity, have as much liquidity, and enough uh, liquidity for larger players to be able to execute orders in big sizes.
Yeah, no question. I mean, the reality is that to some extent, derivatives exchange does have kind of economies of significant scale with respect to liquidity, and obviously, given the diversity of the potential number of products that you may have, you really want to ensure that there's liquidity for each of these kind of micro
Each of
market products. So, like, you really do
Yes.
need this kind of large scale, and I think that obviously the institutional adoption becomes kind of a critical factor in that respect as well.
Yes. So actually, markets are built of, there are both the kind of participants. So you have institutional and retail. Reality is that if you try to bring all institutions up front, then, you end up becoming more like an over the counter desk.
Yes.
If you bring only retail, then you don't have that much size. So it has to go hand in hand. And in my understanding, a good quality institution will want to see enough number of retail participants on the market, because that is when the market becomes diverse enough for them to be able to execute big sizes, and it's not like they are just trading against a few counterparties, because that trading can be done over the counter as well. You don't really need to come to an exchange for that.
Yeah, understood. Understood.
So, so an exchange, in my opinion, has to get retail contributors first, then add some institutions, then get more retail, and then add more institutions. Even in even in traditional markets on exchanges, like if you go and check out data for CME or and National Stock Exchange of India or some other exchange, you will see that about 50% of contribution comes from retail, and about 45 to 50 comes from institutions. So so both the parties play, good role in derivatives market. And in some markets, retail can actually dominate institutions. So so for example, options market in India, right? India is one of the largest derivatives markets out there. According to a Bloomberg article in Jan 2020, India beat NSE, or NSE of India beat CME in terms of number of contracts
Wow.
traded.
Wow.
Yeah. So India is the world's largest derivatives market.
Wow. Incredible.
And and in India, we have about $200 billion of options trading on a daily basis. And India has done a very good job on the single stock options and futures market. So now, if you see the breakdown of numbers there, you have 45% trading coming from retail, 40% coming from proprietary, which is basically a trading desk, or one person opening up a trading shop, or two-person people running a trading shop, and 12% contribution is from institutions. So 45, 43, and 12, that kind of skew, right? So you see retail dominating a lot more in the option space and the derivative space. And what you would think is otherwise, right? You would think that options is something which is primarily for institutions. Let me give you another data point on this. Robinhood's latest filing,
Yeah.
I was looking at data in that, and in their Q2 last year, $180 million of revenue has come from, out of the $180 million of revenue, 110 has come from options trading. So retail actually loves options trading.
Wow.
And if you look at data for 2020 and 2021 in the US, there's been phenomenal rise in the number of contracts that are traded on the option side. And I think in the last 2-3 years, options trading has doubled. Not only in US, it's doubled in India, and there's very active participation by retail audience in the options market. So the idea that options is something for where institutional investors will only participate, or it's not something that retail understands, is actually not quite true.
So really appreciate you joining the Miko Bits show, and thank you so much for being so informative and interesting of a guest. Absolutely, we'd love to have you back around the time of the token event, and then subsequently to unpack what happened. So it's been a great conversation. Thank you so much.